A brief summary of how the U.S. stock market is looking this morning, Monday. Positive sentiment. U.S. stock futures for the S&P 500, NASDAQ 100, and Dow Jones Industrial Average are up, showing optimism ahead of the opening bell. Investors are encouraged by two main themes: a potential trade agreement framework developing between the United States and the People's Republic of China, a growing expectation of a forthcoming interest rate cut by the Federal Reserve, helped by cooler-than-expected inflation data. Watch out for, and risks. Although markets are elevated, this level of optimism means there's less room for error. Weaker earnings, a stalled trade deal, or disappointing economic data could dampen the rally. The upcoming earnings for major tech firms are particularly under the microscope. Strong growth signals will be needed to maintain momentum. The trade deal isn't finalized. It's still in the framework stage. Markets may be pricing in more than is guaranteed. Key drivers this week. Big tech earnings like Microsoft Corporation, Apple Inc., Alphabet Inc., Meta Platforms Inc., and Amazon.com Inc. dominate market expectations. The Fed rate decision event is approaching, and investor expectations are high for a cut. Trade headlines, especially U.S.-China relations and rare earth export controls, remain important. My take: it's a constructive start to the week. The backdrop of lower inflation, trade tension easing, and strong tech earnings expectations is supporting a positive tone. That said, the market appears to be pricing in a lot of good news, meaning surprises, especially negative, could trigger sharper reactions. If you're watching or involved in equities, you might want to be a bit selective or cautious about areas that are already